So all of these orange candles right here might not look special. But if you look closely, you can see that after all of these candles, we actually saw strong pushes towards the upside. These candles are called inside bars. And they are one of the most important price action pattern that you are probably not using yet. In this short video, you will learn exactly what they are and how to trade them to make money. But right, so before we can start trading using the inside bar, we of course first need to learn about, what is an inside bar in the first place. And this is actually very simple. An inside bar is a 2-candle pattern where the second candle is fully contained within the range, so within the highest and lowest point of the first candle. The first candle is called the mother bar. So if we have a candle, let's say that this right here is the mother candle, and then we might have a candle that looks something like this as the second candle. You can actually see that this second candle is completely contained within the range of the first bar, and that is what an inside bar simply is. And what it represents, it basically represents market indecision or consolidation. So this is a pause in the momentum. And it's very important where the bars appear, because for example, if we see an inside bar appearing in a trading range, it might not say anything, but if we have a nice trend, an inside bar can actually mean much more. And here, the inside bars can be found on any time frame, but they are a little bit more reliable on the higher time frames, like the 4-hour and daily. But you can definitely use them for shorter term time frames, like the 5-minute and 15-minute as well. But right, so quickly, why does inside bars even matter? Why should we as traders pay attention to them? Well, first of all, they tell us something about volatility contraction. So this basically means that we have a more quiet phase compared to the previous candle. And if you don't know what volatility is, don't worry, because I do have a video. I highly recommend to check that video out if you are taking trading seriously, but do watch that one after this video. And here, the inside bar often leads to a breakout, at least if we are in a trending market. So it can be a trend continuation or a reversal, but in my opinion, the trend continuation type is much more significant. As for reversals, in order for them to act as a reversal, they need to appear at a key support or resistance level. And you can think about them as a sort of coiled spring. So this is a compression before the price expands. But now, as for the inside bar trading strategy, there are a few important steps we need to pay attention to. And the first thing we need to do is that we, of course, need to identify the pattern. So to do this, you already know, we look for a small candle that fits entirely within the previous larger candle, or in other words, the mother bar. And the best setups form after a strong move, so in either a strong uptrend or downtrend, or near key support and resistance levels or supply and demand levels. The next step 2 here, is very important. We need to read the market context. So are we in a trending market? You really want to use the direction of the current market as your bias when you trade, because inside bars in strong trends often signal continuations. And as I said, you can use them in ranges as well, but I definitely prefer to use them in trending markets. But if you find them in ranges, for example, if you find them, at or very near a support or resistance level, they can still be useful. And here I do have some more bullet points about how to set your entry, how to place your stop loss, and so on and so on. And as always, this full presentation will be available for our YouTube channel members. But I do think it's easier, rather than to show you the full presentation right now, I think it's easier to jump into TradingView and show you guys this step by step. All right, so now let's jump into TradingView. We are currently looking at gold right here, and we are on a 4-hour time frame. But as I said, if you are a day trader, you can also use these candles. You can also see that I have some the candles are actually automatically identified, and that is because right now I'm using an indicator that automatically, finds inside bars, and I will of course show you guys this indicator later. But before I show you guys the indicator, I think it's very important to learn how to identify them in the first place. So let's actually zoom in a bit here so we can clearly see. Let's actually zoom in to this bar right here. And by the way, guys, if you for some reason don't use TradingView yet, I do have a special link, and you can use that link to try out TradingView Premium for free for 30 days. And you will also get a $15 bonus if you, after the trial, decide that, TradingView Premium was good enough. I want to continue using it. If you didn't like TradingView Premium, you can, of course, just stop using TradingView Premium and maybe use the free version. But the free version for TradingView is, in my opinion, very good, but it does lack some things. And if you're taking trading seriously, it does get a little bit annoying over time. But now, let's focus on this bar right here. So if you look very closely, you can see that here we have a red candle. The high is right here. The low is right here. And you can see that this next candle, this orange candle, is completely inside the range of the previous candle. So this right here is an inside bar. But an inside bar on its own is not good enough to take a trade. It's definitely not enough to take a trade. But if we zoom out here, you can see that when this candle appeared, you can see that the gold is already in a very nice uptrend. You can see we had a sort of impulsive move, the price pulled back a bit, we have an impulsive move, pullback, impulsive move, pullback. We are in a very clear uptrend right here. And remember what I said, at least in my opinion, they are much more significant when we have an established uptrend. So when we have an uptrend and find an inside bar, we are looking out for trades in the same direction as the trend. And now you might wonder, where do we set our stop loss? Where do we set our entry, and so on and so on? And what we're actually looking out for here is that we do want to look out for the break of the high of the mother candle. So you can see we have the break happens right here. So we actually want to enter once the price pushes, a little bit above this break. You don't have to wait for the candle close. This is one of these strategies where you can actually enter before the candle closes. So let's say that we enter, a little bit above the breakout. Maybe we start to see volume coming in once again. We might have entered right there. And the stop loss is usually placed below the low of the mother candle, so right here. In this case, you can see that before we actually broke out, the price had dipped even lower. So in this case, you can actually place the stop loss just below the low of the breakout candle. So here you already have two stop loss placements. You can either place it just below the mother candle, or in this case, when the breakout candle pushes even lower, you can set your stop loss below right there. And as for our risk to reward, with a risk to reward ratio of 2, our trade would have looked something like this, and we would have locked in some nice profit. Let's take a look at another example. In this case, we can look at this orange candle right here. Once again, you can see that this orange candle is an inside bar because it's completely contained within the mother bar, which in this case is the red candle. As for our entry, once again, we are an uptrend, so we're looking out for long entries. So we enter somewhere after the price breaks above the high of the mother candle. In this case, the stop loss, it does make much more sense, or in this case, you can pretty much only set your stop loss below the mother bar because the breakout candle didn't push below that one. So if we set our stop loss right there, and then using a risk to reward ratio of 2, our trade looks something like this. And as you can see, this trade is still in play. Let's see if it plays out. It's starting to get, it's starting to get close to our profit target. But it is important, as always, to remember that not all trades will play out. In this case, inside bars are signals you're seeing all the time. And it really depends on the market context. So you can find so many false signals. For example, if the market is in a sideways market, you will find many false signals when it comes to inside bars within the range. That is why I recommend to not trade ranges unless you find them at the resistance or at the support. But in order to find these, perfect spots in the market where inside bars are, I highly recommend to learn more about market structure. And luckily, I do have a full market structure trading course right here on the channel, completely for free. So when you have the time, I recommend to check that course out. If you don't have the time right now, make sure to save it for a watch later playlist. But right, so now let's take a look at some more advanced tips. So the first thing you need to know about is that we can have even double or triple inside bars. So this is a longer consolidation, or in other words, a longer pullback. We actually have quite a few candlestick patterns that are variations of inside bars. And also, if you want to learn more about candlestick patterns, I have a full course about that as well, and I will make sure to link it up in the corner in the eye. Another thing that you need to be careful about is, of course, fake breakouts, called, fakey or fake outs. That is, something to definitely pay attention to. The third tips is look for Confluence. We have already mentioned this, but you want to either trade in the same direction as the trend or trade them close to support and resistance. You can even use indicators like, moving averages. You can combine them with tools like MACD and RSI and so on. But in my opinion, they work very well with like pure price action and market structure. But okay, so I do have some more things to dive into, but I do want to keep this video short, so I will wrap the video up right here. But as I said, I will make sure to post this presentation for our channel members. If you didn't know, we have a an amazing, growing members community right here on YouTube, where I post presentation like this. I post some exclusive videos, some exclusive posts, and so on and so on. And that is also a way for you guys to support the channel. So if you want to support the channel and get access to this presentation and more, please consider becoming a channel member. But if not, it's super cool. If you just like the video, maybe share the video, that helps out more than you guys think. But alright guys, so in order to really master the inside bar and learn even more about the very key concept, you need to dive deep into price action. So when you have the time, I highly recommend to check out this full course next.